Look, everyone's losing their minds over electric vehicle stocks right now. The price tags, they're exploding, like there's no tomorrow. But beneath all this hype, there's a gnawing question burning a hole in your gut. Are these stocks actually worth what we're paying? You're sitting there, watching tickers jump, thinking, am I about to jump off a cliff, or am I missing the rocket? It burns. It frustrates. Because the truth is, if you get this wrong, it's not just money lost. It's years of blood, sweat, and sleepless nights evaporating. And worse, it's your reputation on the line, your credibility with partners, your whole future in risk. The market's pumped full of noise, with analysts, influencers, and experts pitching one story after another. But slab them down, how many actually get the fundamentals? How many understand the brutal tech realities and the crazy scale needed to actually make a dent in transportation? You want clues, not slogans. Let's be real, EVs aren't just cars. They're a seismic shift in energy, logistics, tech, and global politics. Yet, the valuation? It's starting to look like a fairy tale where everyone's got rose-colored glasses. If you're chasing the hype, you'll end up wrecked. Period. Here's the cold edge you can't ignore. Many of these companies are burning cash faster than they're building real value. Production targets get delayed, supply chain issues choke progress, battery tech isn't magically solved yet. Pretty soon, investors get impatient, and the multiple eye those crazy valuation numbers start cracking like old glass. You want to ride the wave? Fine. But don't fool yourself into thinking it's a free lunch. The exit could be brutal. So what do you do if you don't want to be the guy screaming at the end when the crash hits? Stop chasing the obvious. Stop piling into the headline names just because everyone else is. Instead, dive deep into the companies quietly building real tech advantages. Look for those who don't just sell cars but are building platforms, software, battery innovation, supply chain control, raw materials access. The companies tackling real barriers, not just marketing spin. And here's an insider move nobody else talks about. Watch cash flow like a hawk. Profit margins, yes, but cash flow tells you who's really cooking. If a company can't turn hype into steady cash in 2 to 3 years, it's dead money. Trust the cash, not the PR. Also, keep a razor eye on government policies, but don't depend on them. Subsidies change overnight. Markets move on rumors and broken promises all the time. Now, the most brutal truth, this space will spit out some giants and swallow plenty whole. The technology race and the capital grind are relentless. Your edge? Right now, it's not just about picking winners or losers. It's about staying flexible and ruthless. If a company fails to meet milestones, cut it fast and use that capital to double down on the ones breaking through quietly behind the scenes. Don't get seduced by stories of disruption without bones to back them. The future of transport isn't one company's fairy tale. It's a long, brutal war of innovation, scale, and survival. Be smart enough to read past the headlines and seize the actual opportunities hidden in the chaos. Bottom line, if you want real outperformance, dodge the traps of hype and glitter. Bet on execution, cash generation, and unique tech that changes the game. That's where freedom comes from, the freedom to build wealth that lasts, not just fade with a market buzz. That's your work now. No distractions, no illusions. Cut through the BS, focus on what's real, and play to win with your eyes wide open. Subscribe to our YouTube channel and open the featured link to discover more.